with Raamdeo Agrawal to get the fine print from Motilal Oswal along with market sentiments currently. So it's going to be a great conversation, right? Let's listen in to a slice of that conversation, both on Motilal Oswal's numbers, stock up 8.5%, as well as obviously what he makes of the markets now.
Broking has come down at our end also. Broking profitability has come down remarkably, but because of other than broking, like institutional broking, your iBanking, private equity this time has contributed significantly, because now the lot of funds which are going to mature in 2030, 2032, they have come up with the carry, and the carry accounting has started on an accrual basis from this quarter. So that is contributing to another 50-55 crores kind of profit. So all in all, non-broking profitability, particularly from iBanking, private equity, and AMC, they have contributed large amount of profits, and to record to have a profit of 611 crores against last year's, which is about 16% higher. So that has been quite a remarkable thing in this quarter.
How have you been able to, ring fence yourself against the regulatory uncertainty which has come in the broking business with respect to F&O trading, the kind of restrictions which have come in over the last 12 months? Is the broking business now, ring fenced fully in terms of any kind of, such headwinds coming in from the market?
Yeah. So after a long, kind of a tailwind, regulators, they woke up, and last year they put a lot of restrictions, and almost which had become a daily expiry has become now monthly expiry. So obviously there is an impact in the number of contracts you issue, and even the momentum of the market is broken to some extent because of that. So now it's a full 12 months. So I think November 18 was last year which had happened. So November is gone in this quarter. So my sense is this is now the whole story is behind. Now, year on year, if you look at the March quarter, I think even broking will grow, which has not grown till, say, December quarter. Now, in March quarter, I would think that broking will definitely grow over last year's Q4. So, yes, regulatory headwind is over, and I don't think regulator is likely to do anything significant in near term in terms of further tightening the, F&O and other things. So, I would think that now the mood is more positive, and regulatory, I would say to some extent, maybe even tailwind would be ahead. And capital markets are now at the center of political attention also. So I would think this budget is going to be a little more favorable for capital market than, but even if there is no budgetary provision on this, I would think that starting Q4 of this year, like Jan, Feb, March, I think we will see capital markets again growing at whatever 25-30%, which has been set in last 5-6 years.
Your two other segments, asset management and private equity, has performed well in this quarter for you. How is the scale up happening in those two segments?
Yeah. So coming back to private equity, I think we are doing a lot of stuff there. We raised the fifth equity fund of almost like $1 billion. That is 8,000 crores now. Rupee itself is devalued to 90, but so it will be more like 900 million. So that fund is closed, and then we are now raising private equity of a few thousand crores. Let's see how much we are able to raise. So the alternative side, there is a good progress that is in private equity. In public equity, in mutual fund side, I think we are the fastest growing AMC at about 30-40% kind of a growth. So now AUM is standing at about 170,000 crores, which is almost 40-45% ahead of last year's number. So clearly these asset management side, both of them private and public, both have done very well. And same way, even the wealth management is scaling up. So this wealth and asset management, that has been the main contributor to the profit growth this year.
The wealth management growth has been sluggish this quarter. Is it mainly because of the market?
Yeah, one is a mark to market because the assets under management, that also is reflected because ours is a lot more equity focused wealth management. So when the markets don't do well or markets go down by 5, 7%, 10%, the AUM under management in wealth also suffers. So I think that has slowed down in this quarter.
How do you plan to de-risk that? Are you planning to bring in more segments which are non-equity linked as well to ensure that you are able to de-risk yourself as a business?
No, I must say equity, I think the business of equity is very exotic and it is exploding because as the participation in terms of demat is increasing from 40 million to 215 million and still we are getting 3 million every month. So I think there's a lot of juice in this pie. Market will expand, will keep expanding. And my sense is that we are headed for 500 million customers by 2032-33. So it's a relentless expansion of equity markets. And that is also going to give a lot of energy to the real economy. So I think the true wealth is being created in stock market. And again, what wealth is being created, that is being managed through wealth management, asset management and all. So it's a very interesting business. And so around equity, I would say. But debt side, our exposure is very limited. We are trying to do some mezzanine debt or performing credit. That's what we want to do. And that we want to do in a fund format. So that when you lend, you're not lending out of the balance sheet. You are lending out of the fund. So there is no risk to the balance sheet per se. That's how we have devised our way to exploit the very interesting credit market. At the same time, don't expose the balance sheet the way banks are exposed to the balance sheet.
I've seen many of the new age brokerages and many brokerages now getting heavily into margin funding. Do you have a margin funding book and how big is it in case?
Yeah, so margin funding is integral part of retail broking. They're always there. They keep, depending on the market conditions, they keep building it up or I don't have exact number, but yes, there is a significant portion of earnings in the retail broking comes from the margin funding also.
And is that a risk to brokerages given the fact that most of the positions are on the long side for them and if the market is falling, there is a risk which is attached to it?
No, with that T+1, the risk is like 90-95% eliminated. When you had T+7, T+15, then your exposure is very long and the market movements could be quite crazy. With the kind of regulatory margins are there, the movement of the market itself is very restricted. So if the market moves up by 3, 4, 5%, I think your margins are running into 10, 15, 20%. And then apart from the client margin, then you have your own brokerage net worth and things like that. So there is a lot of back-end support for any kind of trouble.
You've modeled your entire operations or company on Berkshire Hathaway. But Berkshire also has a diversified business portfolio into not only equity but other segments.
Very well said, yes.
Are you looking at that point of expanding to other financial services or products coming through Motilal Oswal?
No, we are not looking. See, Berkshire Hathaway we are saying because of one simple thing, that it is made up of two parts of the business. One is the operating business and second is the treasury business. So we have operating business into the stock market. They don't have that much broking. They are mainly insurance. Berkshire Hathaway is more about insurance, and then other incidental businesses are there like railway and those things they have bought. But basically it is started with the insurance money. Ours is capital market. So we will keep building operating business through the capital market, and of that 20-25% will distribute and rest all will put into the treasury. And treasury itself becomes the center of the corporate management. And hence there will be a lot of focus on the treasury. We earn about 17 to 18% on our treasury. Of course, it is unlevered. If we lever it up, maybe it will go to 25%. But treasury per se is not levered, and we earn about 18% on our equity exposure in the treasury. And we earn about 50% on the operating profit on the operating side. So the blend of that gives us about 25-27% ROE. That's how we have designed the machine, so that this is a company where we are trying to, I mean, in last 10 years, if you see the screener, our top line growth has been upwards of 25%.
Yeah.
Our ROE has been consistently at 25%.
Yeah.
So that has been kind of a thought through, and we think that we can now, with the new advent of the capital market, growth in the capital market, growing at 25% across 6 subsidiaries of capital market in terms of operations should be possible, and that has a very high ROE. So our book value growth will be upwards of 20%, 22, 23%. That's how the value creation. See, in the stock market, at the company level, value creation happens at a very sequential pace.
Right.
We cannot double or triple the,
Yes.
kind of wealth, whether earnings or assets. But stock prices can move up by 10% up or 10% down. So there is the value creation in the company is at a sequential pace. I would say we are trying to do it at 25% compounded, but the stock market recognizes it with a lead or lag. So that's why you see a lot of fluctuation. But I think this 25% growth, 25% ROE looks to be doable in near future.
No, you've been growing consistently at 25% for multiple quarters now. When you look at as an investment person across these sectors, are you seeing earnings growth coming back? Because I'm asking this because you have equity exposure which is linked to earnings, and earnings growth back for India Inc.
Yes, I mean, I think what we are seeing in early stage of 40, 50 companies which have come out with a result, there's not a very big surprise anywhere. But today morning I was seeing Tata Consumer, Marico. I mean, these are companies which never used to talk about 15, 20% kind of earnings growth. So that is coming post GST too, and that too only for 1.5 months. So my sense is, banks you have seen, all the banks have been doing very well. So I think there is an earnings revival, and if you see even authorities are quite cognizant of the fact that nominal GDP growth has come down to 8%, 8.5%, which is not supportive of corporate activity. I mean, at 8.5%, I don't think you can see massive buildup of the corporate activity in terms of 10, 12%, 15% growth. So for that, you need a nominal GDP growth of about 10, 11%. Yeah. And that also will support the tax collection. So my sense is now credit growth is at about 14.5%.
Yeah.
And so that has started in last quarter. I would think that it will pick up fully in Jan, Feb, March. So let's see what Maruti declares, and I would think that the demand for all kinds of autos, two-wheeler, three-wheeler, tractors, will be absolutely at peak if you see January number, which will come on first. So we are, I mean, from banks and then auto, consumer, slowly it will start spreading. So I would think that we are looking at growing earnings in the near future. Inflation is still somewhat away in the horizon. So I think we are in good time.
Finally, a question on what is the kind of diversification or new product lineup that you are getting from the house of Motilal? Is there a plan that you have for the next 12 months, new areas or within the equity, because your forte is equity.
Yes, yes.
So within the equity, are you looking at newer areas, newer alternatives which are coming in?
Yeah, within businesses, of course, they will keep launching products. I mean, every business, whether it is asset management, wealth, private equity, but all 6 of them, they will have slew of products coming through. So there will be tens of products if you add up fully. But as a new stream of business, as I said, performing credit, real credit is been seeded right now. See, I mean, every 2-3 years, we keep seeding one business, and one business could be very large. I mean, this private credit is a very large business worldwide. And I mean, it all depends on our competence and our ability to mobilize resources and tap the market. So they can be bigger than the company itself. So every business in Motilal Oswal, if it reaches the potential, has potential to become as big as the whole company itself. So I think there is a lot of growth ahead for the country, for the markets, and for Motilal Oswal, because it's the largest capital market company. So I see a lot of growth, but and if you see, when you see the scale change in last 10-15 years, it is very difficult to visualize what will happen in next 15 years, because 15 years back, we were 100, 200 crores profit company. Today, we talk about almost 10x profit, 2,500 crores kind of thing. I mean, to say that in next 10 years or 15 years, we will grow at the same pace or be even faster, I'm always optimist. I would think that the future is brighter than what we have seen in recent years. But last 5 years has been a very good journey for capital market.